Good morning, everyone, and welcome to the Quantum Leap Morning Leap Session for Thursday, March the 9th, 2017. It is rollover day. We are rolling over to the June contract. That is the M contract. March will continue to trade until the end of next week. But in terms of Quantum Leap and anything we do in Quantum Leap, we will now be talking about the June contract. So while we're doing that, let's pull up the settlement. So these are the rollover adjustments. Pretty tight backwardation on all of these. But the Dow's got Contango, which was very interesting. But anyway, pretty tight contract. Generally speaking, that we'll retest the levels. I call it equalization between contracts. Some of the key levels that are in the contract, specifically being the balance that was that 6-day balance. With the microcomposite VPOC at 62.75, I'm pretty sure that we're probably going to hit that to test that balance. But let's not get ahead of ourselves. Let's take a look at the news first. We did have news out. It was a bit of a snoozer. Of course, the ECB, minimum bid rate, they did not raise. Draghi is in his press conference right now. Basically, he's saying that he is a proponent of keeping the interest rates where they are or low for any period in the near future. We did have unemployment claims. Unemployment claims were higher than expected. 239 was anticipated, came out at 243. Gold got a little bit of a drop. I was trading that drop. Import prices came out 0.2 versus 0.1. No other real big news until 10:30. Natural gas, but the big one later today is going to be the bond auction, and then of course leading into tomorrow. Tomorrow will be where the real, excitements with the non-farm employment change, average hourly earnings, and the unemployment rate. So tomorrow we could see some bigger moves. I thought that we'd get a bit of a bigger reaction off of the unemployment claims, but it wasn't really that far out of whack. We did pop up into the 61, the microcomposite, the Globex VPOC. I can't talk today. The Globex VPOC. Let's talk about yesterday, and I'm going to talk about yesterday in terms of the levels for the June contract versus the March contract. We were looking for a rotation down, and then a slow walk back up towards that 74.75 on the March contract. And we were expecting large rotations. We talked about this yesterday in the pre-market session, that we anticipated that the open would offer up some very large rotations. You can see that we did have some large rotations yesterday. I think the average rotation turned out to be just over 4.5 points. We went down to the 57.75, and then we grinded up into the LVN and the 50% retracement of that last 7.5 point move down. Let's just step back and go to the macro to micro. Now I am showing the M contract here. You can see that the M contract all-time high is 23.97 1/4. Our March contract is 24.01. Throughout history, there's a good probability that we will go up and hit that 2401 in this contract or the next contract. So I do anticipate a possible move up. This contract only goes back, to April, but you can see that the trend has been up. I don't have a 20 period moving average. I've only got the 9 because of the fact that I don't have prior history here. But overall, the trend is up, and we don't even start to violate the trend on the monthly in the June contract until we get back down to the 2200 area. Going to the weekly, you can see that we've got good slope, good separation. We still have this inside week. Watch the low of the prior week at 53.50. That's going to be a key line in the sand for us, because if we get below that, then I'd be looking for a bigger move down to the 23.35. Our week open, okay, because we're going to look at critical mass here. The week open is 23.77. So our current daily ATR is running. Oh, you know what? I forgot to bring that up. Let me just let me bring that up. Forgot to do that. $15.25 is our daily. So our daily ATR full session 20 period average true range is 15.25. So we've got today and tomorrow left. So if we want to look at critical mass on both sides of this, 23.77 plus 15.25 times 2, because we have 2 days, so that's 30.50. So 23.77 plus 30.50. Critical mass to the upside is 24.0750. And 23.77 minus 30.50, this is the one I'd be watching, 23.4650. So if any point in time today we get below that 23.4650, we could see some capitulation of the buyers, and the sellers could press this thing and push down. But overall, the trend is intact. It does not get challenged until we get back down below the 23.22 on the weekly. Going to the daily, you can see that we've been in this this downward trend. We had the FUBAR, Mr. Sneaky, move back down, close the technical gap. The technical gap is against the 9 EMA, and so far we've got some continuation and possible move down to test the 20 SMA at the 23.52. The trend is being challenged right now on the daily. So as we move down in time frame, we're seeing a challenge to the trend. As we move further into the intraday, okay, I've got this declining wedge happening here. I didn't really draw that properly, did I? Let's just redraw this here. I think I drew it on a different timeline. So we have this this wedge coming down, and I'd be watching this upper trend line if we come up here and break above this trend line for a possible trend change back to the upside. But we've got lots of room to come down. If we get into the RTH, we can get down into the 47s, 44 area before we even challenge the lower part of this this wedge. But the overall trend on the 4-hour is down. We've got slope and separation. We're below the 9 and the 20. They're coming up to test the 9 again from below. we're losing a little bit of slope and a little bit of separation, but the overall trend is down on the 4-hour. Going to the 1 hour, you can see that we're coming up and we're challenging this downward trend and coming up and trying to get above the 20 right now. We're above the 9, so they're coming up to challenge it. And then we move to the 30-minute. We are above the 9 and the 20. We just took out the naked cross that we created right here. So we are looking for a possible trend change to the upside on the 30-minute. On the 15-minute, same thing. We're likely going to get a naked cross down here on the 30-minute if we continue to move up. Again, we took out the naked cross on the 30-minute. I'm not going to get into naked crosses, but it's something that you should be watching. And then going to the 5-minute, you can see that we've got a start of an upward trend on the 5-minute and coming back up and challenging this zipper right here. See if we can come up and accept price here and then continue to move up, or whether or not we find some resistance here and come back down and challenge the 9 EMA. It's going to be about 2360 area. Taking a look at the structure, the bigger picture structure, the levels all change, but the story doesn't. So let's just narrate the story. We come up, we create longer time frame balance in around 62, 22.62. We break out of that balance. Then we gap up. We create a 3-day island top at 22.8650. They can't hold value there. They come back down, pick up late buyers down back where at the most accepted price just before the breakout, down at the 62, and then we find our buyers. We come up, accept price back outside of the value, higher at 72.75. Then we gap up back into the island top, accept that price one more time, and then we go into price discovery. Gap up, price discovery, gap up, price discovery. 2-day balance, accept the 23.19, continue up, create 3-day balance, accept price at the 38.75, and then we gap up again, create this 6-day balance. In around the 59.25, and then we gap up again, put the blow off top in, put a new all-time high in at 23.97.25. Why does it say 23.98? What was the high here? Okay, it was 23.98, not 97. I'll have to do a data download just to make sure, but I'm not going to do it here. And then we get the bearish engulfing. They tried to hold value one more day here at the 77.75, and then they fall out of that, come down, try to hold value here at the 67.50, and then we continue down. We break the one-time framing up on this day right here, and then we start one-time framing down, and we come right back down to the balance that we gapped up from at the 59.25. They get as low as 57.75, and so far, we're coming up and testing the upper side of this this balance. I'm expecting that 62.50. This right here, this 6-day balance at 59.25, it was 63.50, or sorry, 62.50. So I'm expecting that to at least get challenged. Key levels to watch for here. 63.50 is the 3-day value area low, as well as the CLVN. If we can get above that, I'm targeting the 65.75 and the 67. Our key line in the sand above us is going to be 71. And then, balance right now is going to be at the 59.25. If we don't hold that, they could take a trip down. I'd be targeting the 54.25, the value area of the 6-day microcomposite. And then if that doesn't hold, look for them to come down and test the lower side of this balance and the key line in the sand, which is going to be 48. Anything below 48, I'm looking for a move back down to close this naked close down at 44.50 and push down through into this 38.25, and it was 41 and 43 we were looking at on the March contract. All right, so that's the big picture. Taking a look at the Globex, let's start putting our numbers in. First of all, let's put in our critical mass below. I have to take all this out because this is all from March contract. Key line in the sand we said was what, 48. 48. And our critical mass right now, as of today, is down at 46.50. I'm not even going to bother going to put the upward critical mass in because it's so far above us right now. I'm not expecting a big move up. So right now the overnight low is down at 55.75, and our overnight high is at 63.75. So looking at our daily ATR targets off of the low overnight of 55.75 plus the daily 20 period ATR 15.25, our upside daily ATR target is 71, which also happens to be our key line in the sand above. And don't need this. This is not valid. And off of the high overnight, did I already do that? 63.75 minus 15.25. Well, 63.75 minus 15.25. 48.50 is our daily ATR downside target, which is just above our key line in the sand. Interesting how these numbers are playing out. Okay, so taking a look at overnight, we have our Globex VPOC, which could change back up to 61, but I'm going to put it here at 60.25. Just one tick above the naked VPOC from yesterday. We have an LVN right here at 59.25. I'm going to be paying attention to that, but I'm going to actually use the value area low here because I want to try to get short into the low of the prior day and push down into the overnight. There is an LVN right here at 61. I am going to use that. I'm actually going to use the 61.50, which was the prior day low on Tuesday, and then I'm targeting the overnight high in the midpoint here at 63.75. The open from yesterday is right on top of the value area high. Also, where the VPOC was most of the day yesterday. So I'll be using that as a trade level, and then I'll be targeting that 71 area. My main target above this is going to be right here at 68.25. And then above the 71 key line in the sand, I'm looking for a gap fill and move to the 72.50. I'm going to be watching the 75.25. Just got to put all these levels back in. 77, 75. That also happens to be a naked Deepak and naked close. And then 81 and a quarter. 82.50. And then 88 and a quarter. This is not valid. Target the naked Deepak at 93 and the CHVN 93.50, and then of course the all-time high at 98. Sorry, I'm taking a long time here. I should have done some of this all-time high June. And then 2401. All-time high March. All right, that's everything to the upside, to the downside. Of course, we've got our downside, a daily ATR, critical mass, and key line in the sand, all around that 48.50 to 47. Below that, target the 44. And then we've got 40, push down to the 38. This is no longer the gap mid. I'll have to readjust that. 33 and a quarter. All right, those are all the levels I need to do right now. In terms of hypothesis, we're going to be opening up inside of value, inside of range, in the lower distribution from yesterday. We have been one time framing down. I'm expecting them to open auction in range, push up, either fail at the 61. I'm thinking that they're going to push higher. I'm looking for them to come up into the overnight high 63, between 63 and 67, finding responsive sellers, and then start walking us back down towards the 58 area, chop around here, and then push down into the overnight low of 55, possibly even a late day push down into the 52.50. So that's my main hypothesis. My secondary hypothesis is an open auction in range, a push down, failure to break the low of the prior day, or a push down into the 55.75, find buyers, rotate back up and chop, okay, between the 55.75 and the 67 area as we auction in the new contract in this area, okay, around these two microcomposite Deepaks, the 67 and the 60 and a quarter. So hypo 2 is a push lower, false breakout or a failed breakout, and then move back up and just go sideways and chop between the 67 and the 58. Hypo 3 is an open auction, failure to get above the 60.50, maybe to the 62.75, but then fail, push down, break out, chop around the 55 to 58 area, and then fail again and push all the way down, okay, down to test the 47, 46 area, chop in this area, and then push down and come down and close this gap at 44 and close somewhere between the 40 and the 47. That's hypo 3. Hypo 4 is an open auction in range, an immediate push up into the upper distribution, chop around here, push up, come up and close the naked close here, and then chop between the 72 and 77 area up here, and just chop in here as we mature the auction in the June contract here. Those are my main hypotheses for the day for for ES. Going over to gold. Gold, you can see, pushed down and tested that lower side of the distribution around that 650, almost to the tick. Got down to, what was the low of the night? The low of the night was 290. So basically pushed through a couple ticks and then rotated right back up into balance. And now we're chopping around this 6 to 8 level. Keep an eye on this 11 area. If we can come up and break above this 11 area, then I'd be expecting a push up into the 18. The 22, okay, is going to be our over-under line. As long as we stay below the 22, then I'm anticipating continuation of this move down. We need to have a counter rotation. I just don't know how big it's going to be. I'm looking for a counter rotation up into the 18 to the 22 area, and then I'm looking for a failure and resistance to come in and continue to push us down, okay, towards this 95 and this 92 area. If we get above the 22, then I'm looking for a bigger retrace, okay, and a push up into the 27 and the 34 and a possibility of a continuation. But you can see we broke this, this trend line, okay, that we were on, this upward trend line, and we broke a key level, which was that 22-23 level, and we did not bounce off of the 1860 with any significance. Okay, so we've fallen through and gotten below the lower distribution around that long-term composite VPOC. This goes all the way back. This is the most traded price going all the way back to October the 24th, 2008, and we did not bounce off of it. So I'm looking for a possible move back up to it, and then failure from there and continuation lower. Of course, we've got news and the Fed rate that could, either change it or expedite the move down. So that's what I'm looking at in gold. That's going to complete our pre-market session. Sorry for taking so long, but again, rollover is always not fun. I hate rollovers. Anyway, as always, trade well, trade safe, and we'll catch you on the flip side.